Innovation is everywhere. And with Fitbit, some of the latest technology is now on your wrist, helping millions achieve their fitness goals. Can it outrun the world's largest competitor?
As we get closer to the holiday season, could this be Fitbit's time to shine? Ever since the #1 maker of wearable fitness trackers came public in the summer of 2015, well, it was kind of like clockwork. Every quarter, Fitbit reports some incredible sales and earnings numbers. I would say that they're fantastic. Then they give a little tepid guidance and the stock would get hammered. It just kept happening. The stock tumbled from its highs of $51 about 14 months ago to $14.61 as of today. However, lately it seems like the stock is starting to get some traction, deservedly so. It's up a quick 14% since we spoke to the CEO just in June. And when Fitbit reported its most recent quarter 2 months ago, they soundly beat expectations and finally delivered some top-line guidance, inline guidance that was terrific top-line, rather than just giving the kind of grim forecast that some people thought they were known for. Plus, they've been trying to transition into more of a corporate wellness play, and that's where I think the really big money is. So could this be a good time to circle back to Fitbit with the holidays not too far away? Or should we be concerned about a spate of studies suggesting that the wearable fitness devices might not actually help people improve their health, well, long-term? Let's take a closer look with James Park. He's the co-founder, chairman, and CEO of Fitbit. Hear more about how his company's doing and where it is headed. Mr. Park, welcome back to Mad Money.
Thanks, Jim.
All right, James, let's get right to it. Digital health plans are where I think the big money is. You've had some big news this week that indicates that it's really coming true.
Yeah, we had an amazing study published earlier this week by a third party that showed that for employers, the average cost of health care for a given employee who opted into a Fitbit wellness plan was 25% less, or $1,300 less than someone who had not opted in. So that's a pretty amazing result.
Well, given what we've read about some press, there's a JAMA study, whatever, said that these things are, that people don't keep up with them, question their worth. That seems like empirical evidence that any study that would be done that said that would discredit things is just wrong.
Well, JAMA's, a great publication, but that study was actually started 5 years ago, and they used a device that wasn't even a Fitbit. It was a huge brick that was on your arm.
Wasn't a Fitbit.
It wasn't even a Fitbit.
Okay.
So,
doesn't mean everyone presumed it was a Fitbit.
I don't know what
you know
conclusions
that.
you can draw from that. But I think for us, there's so many positive studies that show the great impact that our devices and services have on people's health. We're in over 200 clinical studies. So I personally am really gratified by just the great effect that we're having on people.
Okay, well, let's talk about another thing that people seem to confuse, Apple Watch and Fitbit. Apple doesn't make any claims that they are what Fitbit is. Fitbit doesn't claim that they're anything that Apple is. I just need you to straighten out the confusion because no matter what, anytime Apple does something, people get scared.
Yeah, I think that's a natural reaction, but we are very different companies with a very different focus. Our mission is to get people healthier and more active, whether it's through our devices, our software and services, and it's all supported by an amazing community of users that has a tremendous network effect. People love our products. They recommend them to friends and family. They compete on Fitbit, the mobile app, and Fitbit.com. So it's a tremendous social experience that's been powering our growth.
That's very different. Look, I love the Apple Watch, but that has nothing to do with what the Apple Watch does.
No, that's one product. We have a broad lineup of products, and we're a fitness social network that's coupled to hardware, and we're on the cusp of transitioning the mission and purpose of our company from a consumer electronics company to a digital healthcare company.
All right, now, there are still stories. I mean, for instance, the other day, your stock was starting to move up, and then suddenly Pacific Crest comes out with a piece which says they've done some channel checks, and they say that your new Fitbit has got too much inventory. I mean, I have become very chagrined, if not questionable, about channel checks, because when Apple was at 93, the channel check said that the 7 wasn't going to work. 7, I think, is in short supply. Can I trust channel checks versus what ultimately the results will be?
Without knowing how that analyst did the channel checks, I can't really say. But what I can say is, look, we just started shipping the product. I mean, Fitbit Charge 2 is the #1 best-selling fitness tracker on Amazon. We launched 2 other great products earlier this year, Alta and Blaze. And if you remember, the investor reaction to Blaze was, I think, just, I couldn't understand it at all. And even today, Blaze is the #1 selling smartwatch on Amazon.
All right, now, international has been even stronger than domestic. You've opened offices overseas. Last time we saw you, it was accelerating. Continues?
International is so important for our company's growth story. We opened EMEA headquarters in Dublin. And what that's going to allow us to do is bring a lot of focus, excitement, passion to really growing that business. And, we saw the first results of that at conference and trade show called IFA in Berlin.
Right.
Amazing reception by customers and partners there.
All right, how about the Step Up Challenge? Tell me about it.
Yeah, so Step Up Challenge is something that was inspired by the Surgeon General of the United States. It's a 2-week step challenge for all Americans, regardless of their age and fitness level. And it's just meant to raise awareness, get people moving. But what's most important about it is that it shows that Fitbit is very visible at the highest levels of the government. And that's important because the government has such a strong say on healthcare policy in this country and directly controls so much healthcare spending, whether it's through Medicare, Medicaid, and the VA system.
Well, speaking of visibility, have you thought about for the holiday season just this notion of a couple of pop-up stores? Because I think that it's absolutely true. Number one on Amazon, I've given it to my family. But, sometimes you just want to feel it and see what the changes are in order to figure out whether you want to upgrade. It's harder to do on a flat screen. If I just knew that there was a Fitbit store, I would go in and take a look at all the merchandise.
Can't speak to the future in too much detail, Jim. Okay. But look, we understand that the power of Fitbit originates from the consumer brand and the consumer loyalty that we have. So we're looking at a lot of different things to magnify that.
Well, the reason I ask is because I think that the holiday season could be a good one, but I find that sometimes it's dictated by what the analysts say. And what I'm trying to take away here is that you shouldn't let the analysts, we're not letting the analysts speak for the stock. Let the numbers of the company itself determine how the stock does.
Yeah, we're looking out for shareholders, and we want to stay true to our mission at the same time. We're in it to win it.
I think you are, too. Now, admittedly, I've been too aggressive. I've always said that, but I love the product. I love the company. That's James Park. He's the co-founder, chairman, and CEO of Fitbit. Mad Money is back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.